Welcome back, everyone, to the Crypto and Coffee podcast. My name is Giordano Bertin-Maurice. I'm joined today by David Blackstone and Cordell Tanny, also co-founders, well, not co-founders, also founders of the very own startup. And we hope that you guys, grab your cup of coffee, tea, whatever it is. It's currently freezing weather over there, Canada and Georgia. I'm currently in the Caribbean, so I can't really relate to any of that. But on today's episode 10, we're going to be talking about, building in the bear market, what it's like to be an entrepreneur or founder in the bear market. So, Cordell, if you want to say anything to that.
Well, I mean, there's a lot to say to that. I mean, I guess the idea here that what we're trying to address is, right, I think so many people in the crypto industry, and even those that are, let's say, the outside observers, have all heard about, let's say, the boom bust cycles, or like the 4-year cycle that cryptocurrencies or Bitcoin in general has tended to go through. And, right now, is what we're witnessing any different, right? So we've seen Bitcoin hit the peak of about 125,000. It's trading now around 77,000. So, there's a number of ways to look at it. So our idea here was, okay, well, are these 4-year cycles still valid, or has there been some significantly structural changes to the entire cryptocurrency market, given institutional adoption, maturation, Clarity Act, all of this stuff going on? Are the old patterns still valid? And then at the same time, why are we always so focused on the price of Bitcoin and not focused on the underlying technology? Just because the price of Bitcoin has fallen to 77,000 doesn't mean the underlying technology of Ethereum, for Ethereum, Solana, is not being used by entrepreneurs to build the next generation of technology. So why are we so focused on price when you still have an army of entrepreneurs out there building the next generation of technology? So what is it like to be one of those entrepreneurs when you go through this environment where Bitcoin sort of loses its hype in the market? So I think that's really what we wanted to address a little bit today. And I think it's just one way I'll open it up, with Bitcoin and everything like this, a drop, let's say it's called a 30% drop from a peak for Bitcoin is actually kind of normal. Events like this are going to happen typically about once a year, just based on normal probability distributions. So, it's just everyone seems to panic, and then the news turns negative, and then nobody talks about Bitcoin anymore until it comes back. And that seems to be the cycle that, has been around. And will that continue into this one? Well, that's what we're going to discuss.
Yeah. I personally think, with this environment, it really does show who's here to build infrastructure and who's here, chasing the trends, right? So, most founders, some people think that, it's a lot easy because you're an entrepreneur, you can do what you want, but most of the time it's a lot of work. And this environment really shows who's here, right? So instead of, being here for the funding, the hype, you're trying to be here for the long run. Like, it might take, 2 or 3 years. It might be a long 4-year cycle before, anything really happens with infrastructure. And that is one thing that this market does, not only for founders but for traders too. Sometimes it will shake out people who are here for that uptrend. It'll also shake out people that are trying to make a quick buck. As you said before, Bitcoin is sitting at 75K, and the chart has a lot of support as of right now. And I think you said on the last episode, Bitcoin is most dangerous within trading ranges.
Yeah. It is, and it's broken out of that trading range to the downside now. So, if you're a mean reversion kind of trader, this is when you'd be getting in, right? Because you want to see that it's broken. It's oversold, really. I mean, Bitcoin has got hit really oversold levels. Yeah. So the mean reversion will get in there. I mean, but that's really approaching it from the trading aspect, right? I mean, but has anything changed in the business aspect? So the builders, I mean, David's a good person to comment on that, because he is a builder. He is someone that is building infrastructure, building the products that are using the Bitcoin and working on DeFi. Mm-hmm. So what's changed? David, has anything changed for you in the past 2 to 3 months since we've hit the peak and now we're hitting 75? Has anything changed for you as an entrepreneur?
Absolutely nothing. So when it comes to newer entrepreneurs, nothing is really going to change. When it comes to the ones that have already made it, nothing is going to change. So either like it's the ones in the middle that are that are probably going to feel it the most. And I say that because as a new guy into the space, if I'm building, I'm building. Like I don't really care about if Bitcoin is at 1 million or $1. If I'm building, I'm building. And if it is at 1 million, great. I can sell some, hire on some people. Like there's that, but most of the time, most of the work that's going to get done is going to get done through me because I'm the tech founder of this. I'm the one building it. When it comes to the guys who have already made it, they've got money to throw at their investments. They're good. But when it comes to the people in the middle, those are the ones that I imagine are going to get affected because that's now. This is where I imagine that it's the investors on the fence who are going to decide one way or another based off of the market and not the person. If those exist, those are going to be the ones that are going to be affected by this time, because any founders that would have swayed them would not be able to because of the market, because the investor at this point would be saying, well, it's a bad market, let me keep my hands off of things for right now. That is a very, very speculative statement because I've never gotten an investment. This is so that is extremely speculative. I don't know if those guys exist. A lot of people believe that they do. Maybe they do, and if they do, they're going to be the ones who are affecting things right now. Like, okay, let's wait and see.
So I have a question for you two, right? In the bear market, would you say in the bear market is the best time to build because there's no speculation, right? You have to find your product market fit in the bear market.
I can take that. I would say that I'd say that any time is good. If you're going to build in the bull market, you can release then, you can get some hype. And maybe that hype sticks around. You get more people trying your thing, you can and more of those people will stick around. If you build in the bear market, or if you build in the bull market and transition into the bear market, like release into the bear market, great. You can see the people who are in crypto for the crypto. They're there to try new technologies, and those ones specifically, the ones who are interested in trying new technologies, they're the ones trying your thing specifically. And then if you build in the bear market, then okay, you're already there. You don't have to worry about missing hype or anything, which I imagine a lot of people in the group that I just mentioned would probably be thinking about. And you can just directly target those people who are there for the tech. Those people who are willing to try things, not because they think that they're going to get a payout for it, but because they're interested in trying new things. And if you're building that in the bear market and going into the bull market, then you could, then depending on timing, maybe you can get a bit of the former, but you can ride up all of the hype as it goes up and get all those people that are pouring into crypto because they think they're going to become a millionaire this round.
Yeah, I think the other thing to think about also is, right, building, you're building, but you're also running a business, right? So you do have to adopt tactics and stuff like that when the environment changes. I mean, first off, everything comes down to your burn rate, money, and everything like that. Like what is your burn rate? How much money do you need to operate? If you need more money, are you going to be able to raise it? So a lot of the times you're going to be adapting a little bit of, could be your hiring practices. You're going to be changing your marketing a little bit. So a lot of the time, you got to be, like talent, especially in this case, you got to be careful. You don't want to lose talent. You have to be able to retain talent. So, normally it's like in this kind of environment, you're probably going to have to hire a lot faster. That's what I've seen from a lot of different, kind of entrepreneurs when they're going through this kind of bear market is like, you're going to want to get your hires done in like 2 weeks. As opposed to before, you had the time and luxury, you can go 6 weeks. But nowadays with the way things, the way talent moves around, especially in these kind of shakeout phases, you got to hire quickly and you got to maintain your talent. So you also don't have the ability for bad hires. You can't waste money when you go through this kind of environment. So you got to be very careful with who you're hiring, careful with your costs, your onboarding. Everything has to be done quickly. Because remember, the longer it takes to onboard someone, it costs money. That's time that someone's not doing a job, time that you're spending training someone potentially. So, things have to move faster. Then at the same time, I would say I love to see how the marketing tends to change when you go through these different kind of phases for a business, right? So I always found it very interesting, more from the old school, let's call it the traditional finance with the asset managers. Whenever it would go through, like the 2008 or those kind of big bear markets, the teams that normally get hit first are sales and marketing. So, when things are going great, you're making money. Remember, because the asset managers are paid on fees. So let's say you're paid, 2% on AUM or whatever, 1%. The better the markets are, the more assets you have in your management, the more fees you have. So the second that starts to contract, you cannot continue to support the force that you had out there running around trying to drive sales. So they wind up cutting sales and marketing is like the first thing that you wind up cutting when things start going bad. But that's, to me, that's counterintuitive. I would think that marketing is the one thing you're going to want to invest more money in when things are going bad, to get your message out, to keep your following, to keep your sales going. And I think the way that marketing adapts a little bit in the cryptocurrency or the Web3, it's called the Web3 space, is that when we're going through the bull market, we're going through everything's great, we're getting all the attention, we're focused on the attention, we're focused on the hype. But when you start going through a phase like now, even though it's only been a couple of weeks, really, it's hard to say that we're in like a phase, whether or not it's just a normal correction. But anyways, it's marketing tends to move more to what value you're adding. Like your marketing focus is more on education and getting people to understand your brand, getting people to understand the core value added that you're, the problems that you're trying to solve, and getting away from just the hype phase that you had when, oh, cool, it's shiny. And that's what I love to watch in this case, is to really see who's adapting and how their marketing is changing to be more educational and value oriented, as opposed to just trying to capture on attention and hype. So that's one real, change that I see typically happening in this kind of environment.
Yeah. I would like to say, like, I think capital efficiency is probably one of the most things you can do or have as, like, an entrepreneur, especially like, if you're bootstrapping your startup, as you said before, like, even taking long to hire does take money out of your pocket, essentially.
No, it's important, and marketing costs, as I understand it, because look, I'm more of a trader, but the marketing costs tend to go down. I think the KOLs start charging much lower fees. I don't know, David, do you use any KOLs to help? Do either of you guys use KOLs for your marketing?
Well, we personally don't at Assetra. We don't.
Have you, David? Have you ever looked at, like, when I was at Token 2049, it was like, I saw so many things come across Telegram. Oh, I'm a KOL. If you're interested in promotion, let's talk and stuff like that. So I was always curious, like, to see who's actually using them.
I tried a couple and they were wasted money.
Yeah.
The best money that came in for it, the best returns that came in for it were from the ones that were just starting out, that specifically did not ask for any money. Because those ones were actually trying to build their following, not trying to bribe their following. So the people that were following them were more likely to actually be interested in what they were talking about, because they were following because of what the person was talking about. So those were where I got the best results for new people that were coming in that were interested in the technology itself and what was being built. But let me just mention, I did see something related to hype versus substance with regards to crypto this cycle. With the recent thing of Twitter changing their algorithm and all the crypto people getting angry about it, you had, during the bull run, everyone, like all these different crypto companies, saying things like "good morning" for their posts, and then all the people under that post saying "good morning" in the comments, like fake activity. And it looks a lot like spam. So Twitter did away with that, so that way they could put out more tweets of substance, and that would go towards your following. Now that things have dived a little bit, you now have companies saying, "Oh, hey guys, so we built this thing. It does this, and that's why things are going to get better over here, because we now have this feature." So before, absolutely nothing, just, hey, we exist. And now we've built something, check it out.
Well, that's a positive thing, right? I mean, I know, because those good mornings and things like that, I mean, you see them everywhere. You really do see them everywhere. So I didn't know that. That's really interesting. I mean, that's got to be a positive though, because I think it would sort of at least, you know, get the legitimate tweets and everything out there, the legitimate posts. It can really help the legitimate brands quite a bit. But I think that, look, we're still, you know, that's the one thing about the crypto space, right? Is still trying to distinguish, you know, real from fake, value from not value. So I mean, that definitely adds layers of complication, given that it is still the Wild West to a very big degree in this industry. And you would think that the more bear markets and the more things that we go through like this, the more it would sort of stabilize it or bring it more into the next level of, you know, where TradFi kind of sits, right? So I guess, you know, is 2026 going to be a year where we really see a lot of, you know, what the jump in the crypto space is going to be like towards more legitimacy, more, you know, less scams, less danger. So that I don't know. That I think could probably take a lot of time. I mean, look, again, we've only been in this little bear market thing, what, 2.5 months? It's not even that much right now, right? So most people can just consider this an average little pullback, and Bitcoin could easily start going back up to 125 in 2 weeks for all we know. So, I mean, it really comes down to, are we seeing the actual signs? I mean, and this comes back to that question, is that 4-year cycle, the 4-year Bitcoin cycle, still valid? And is that what we're witnessing right now?
I potentially would say so, right? And I think I said before earlier in the episode, Bitcoin would not like shake out whoever when it's, you know, on a support. But for right now, I think that, you know, it might go up. It can go down from like the chart we were looking at, you know, previous starting at the episode itself. It showed like a lot of resistance. You said in terms of like going below 70K Cordell. But you know, if you hit like 50K, it's kind of anyone's game.
Well, at this point, like based on what I was seeing from the chart, I mean, the fact that we fell through 83, 84 looks like we're going to go down to 75. We're pretty much there right now. And, you know, it looked like I saw like a head and shoulders formation on the Bitcoin with a head and shoulders top, which is really not good. It's like one of the most classic reversal signs, which means that Bitcoin could easily see itself down to 55,000 if the current, you know, it has to hold right now at 73, 74. If it falls below it, this thing could easily hit 68 and then 50. So, you know, we have to wait and see. But, you know, like, because when I think about the 4-year cycle, right, you know, it's, you know, the 4-year cycle was primarily retail driven. Like almost every single thing that we saw in the past was retail driven. We didn't have institutional players. But given, you know, if we think, let's look back for a second, even at like the successes of 25, right? And that'll help us decide if we've experienced these major structural changes in the whole Bitcoin market. So think of the IPOs that we had last year, right? Between Circle, Gemini, I mean, I probably wouldn't be able to name all of them, but we've had some major IPOs. We've had a major, how many ETFs launched, were launched last year, the amount of assets that were taken in, a lot of stability. I mean, at what point this is going to change this from a primarily retail driven market to a more, you know, a TradFi dynamics where you have institutional dominance? I don't think we're there yet. But I do think that a lot of the institutional adoption, the Clarity Act, the stable coins, everything that's coming out, I think it might have altered the whole 4-year cycle that we've been so used to seeing. So the question really now is, where is it going to go from here? Is there liquidity? Are there buyers? You know, the buyers have to step in at a certain point and say, okay, you know what, this has just come down way too much. I'm going to start buying. And that should send it back up. Nobody knows if we're there yet. I mean, you really have to, I don't know if you guys ever analyze, like you look at where the buyers are, because, you know, you can see where all the order flow is, right? And I don't think there were a lot of orders. I think there's a lot of buy orders that would come in at around 73, 74 right now, that looking for that. So there were no buy orders, you know, there's no liquidity between 90 and 75, which is one of the reasons why it just went down so quickly, in my opinion, based on what I've researched.
Yeah, I've not seen much about companies, large companies, or large countries buying Bitcoin or looking into Bitcoin. Small countries, small companies, sure, and that was last cycle. And what a lot of people in Bitcoin are going to argue in my opinion, is that everything has been building up, and in the next cycle or the one after that, that's where you're going to see adoption from these larger players and full adoption at that point. But I don't see that, and I don't see them doing that.
Yeah.
Now, I would like to believe that, but I don't see them doing that. What I do see is all of them buying gold. And for some reason, and I don't know why, also buying silver. Now,
well, the silver, there's other dynamics to it. Go on. I'll address that after.
Yeah, I'd like to know about that one. Now, with what they're doing, looking at BRICS as an example, you have them buying up all this gold and then creating their own crypto that that'll be used to handle forex on chain between them, with gold as a backing and bonds, but a large portion of that is going to be gold as the backer. They don't need Bitcoin, and they're not going to use Bitcoin to trade between themselves. So given that more than half of the global population is now involved with BRICS, where would that demand come from? And I don't see that.
So I wanted to ask, is people also buying up copper along with, silver and gold?
Sorry, buying which one?
Copper.
Yeah, absolutely. So I mean, look, but copper's got a lot more industrial applications, right? So you cannot have economic growth without copper, right? You need it for wirings, for everything, whether it's commercial real estate, individual real estate. You can't build without copper. Like all of the transmissions. The reason why we use copper is because copper doesn't react, with the flow of electrons and electricity as it goes through. It's one of the why it's such an ideal conductor. It's an ideal thing that we use for pipes. And, like if you think about pipes, like water is one of the most reactive substances on the planet. Copper doesn't react with water, which is one of the reasons why we use it for plumbing and stuff like that. So anyways, copper's got way more industrial applications. So silver and gold have typically had more of an inverse relationship, right? So whereas gold would be your risk-off haven, silver would be more risk-seeking, So they would tend to almost move in opposite directions. That hasn't been the case in this cycle. So ultimately, supply and demand drives everything, right? It's all about supply, demand, and scarcity. So when you're dealing with silver doesn't have a lot of supply right now. There's very little new supply coming out. Getting the silver mines active, it's been a lot more difficult, and just lack of discoveries, not like gold where you I wouldn't say you have as many gold discoveries as you used to, but you still have. And silver's been in crazy high demand for industrial applications now. You need silver for EVs, for electric vehicles. You need silver for solar panels. It's even involved a lot in the whole AI chain right now, because silver is a component in a lot of the infrastructure required for AI. So it's you have insanely high demand for it, and it's also being used as a safe haven. So a lot of it comes down to the US dollar. And a lot of the risks with the US dollar have been potentially rising inflation. It has also been the uncertainty of the new Fed chair and what their policies were going to be. And just overall, just general, fear of the US environment. And are they intentionally pushing the value of the dollar down? So if the value of the dollar is going down, gold's going to go up. Gold's going up. It's like a rising tide is going to lift all boats. So that's been driving palladium. It's been driving a lot of the precious metals. So silver's just been hit with like this perfect storm of industrial demand plus speculation. And it gets a little dangerous. And that's when you can see a 30% unwind. And this is what I was like, David, I was telling Gio this before we started this, is like, one of my main strategies is a momentum strategy. Momentum is one of the best factors for all investment strategies. And one of my strategies has been very heavy in gold and silver, to the point where I was up 20% in the month of January. I saw that entire gain gone in 2 days, Thursday and Friday, to the point I was still up 2% for the month. And I'm fine with that. It's like, it's better than losing money, because you never want a winning trade to become a losing trade. But, seeing 20% loss in 2 days, That's just the nature of it. But that also just tells you how much it's been driven up and how many people have been piled into it. And when these things unwind, it is painful. It is painful. It's just also been weird to see the relationship of Bitcoin and gold not really following what it's supposed to right now, right? It's like, they both should be tracking against the US dollar, opposite, inverse to the US dollar, if we believe that Bitcoin is going to be a replacement for the US dollar in times of trouble or whatever. We just didn't see that through this cycle. We just didn't see it as much. It should have been going up then as the US dollar was falling, and it wasn't.
Yeah, and that was a narrative, but there's a very, very big difference between narrative and substance. In that we've had the narrative on Bitcoin going for a while, and first it was internet money, and then it was store of value once better internet monies came along. And since it hasn't shown itself to be a store of value in any of the economic cycles that we've seen, not 4-year cycles, but the economic cycles. Anytime you've gotten a drop in tech, anytime you've gotten a drop within the economy, people sold Bitcoin to have money usable to buy things. So I've not seen it be a store of value. Everything that I've looked at with regards to Bitcoin has been what's the adoption looking like, and is momentum building or is it not?
Yeah.
So like for example, Tesla buying, El Salvador buying, whatever that one where that guy who's always on drugs, whatever company he has. He was buying like that. It's that guy where it's like, oh yeah, Bitcoin. It's mental energy put into the internet, and that's why it has like he's always on drugs. I don't remember his name, but that guy. Yeah, I've
never heard that.
Yeah, look up the biggest speakers on Bitcoin. One of them owns a company, and he's using that company, like selling shares within that company to buy Bitcoin. It's that guy, and he never has a coherent thought. It's always like he just took a line and then started tweeting. So I can never take him seriously, and he's one of the biggest talkers on Bitcoin. Like he's one of the biggest people that people look at for that. So you have people like him. MicroStrategy, that's it. Michael Saylor with MicroStrategy.
Michael Saylor.
Yeah. So you have MicroStrategy, you have El Salvador, you have Tesla, and they were buying Bitcoin, and Tesla was on and off about it, and as far as I remember. But so you have those main two, and yeah, that was good adoption. But when that adoption didn't fail to realize within others, that was a good point at which you could say, okay, well, maybe it's time to sell. Now, sure, we have others like Venezuela that apparently had a good store of Bitcoin, and that makes sense. They were an impoverished country that were hollowed out by inflation. Going to anywhere you can makes sense for them. You had a lot of people on there. You had a lot of people in that country who were just farming RuneScape in order to make money. That doesn't mean RuneScape is a great store of value. It just means that you have a way of making money through RuneScape. So what we have here is a different. What I see here, not necessarily what we have, but what I see here. I can be wrong. I can definitely be wrong. But what I see is that there's a very big difference between the narrative and the real, and I'm not seeing the real show that this is a good store of value. I'm not seeing the real show that this is a good internet money. I see better internet monies, I see better store of values, and I see these large countries that determine where the other countries go because they always follow each other. Like most people in the world end up being lemmings. So you have all these leaders who are leaders of their own countries, and they're looking at these other countries and saying, what are they doing? Let me do that. And so when these big countries do this, they follow and they do the same thing. And these big countries have been buying gold, not Bitcoin, but gold.
Yeah. Well,
so I wanted to,
sorry, go ahead, Jim.
Yeah, so I wanted to ask, right? I do remember sending an Instagram reel in Telegram chat, and I wanted to ask you guys: do you think tokenization is the next big thing? Because in the reel, it said that the CEO of BlackRock basically said tokenization is like early Facebook in like the 2010s or like 2000s. Do you guys think that is true?
We're talking about real world assets.
Yeah, tokenization. Yeah.
I certainly hope so. but I'm not convinced. I mean, I think it's going to take a lot of time, and I think it really depends on which assets we're talking about. There are so many advantages to doing it for real estate, for things like art, for doing it for some other kind of, for other assets. I am not convinced that it is good for stocks at all. I'm not convinced. I mean, because again, the whole point behind buying a stock is that you get percent ownership of the company, you get access, you're entitled to earnings, you're entitled to dividends. Tokenizing it doesn't do that. So then what exactly are you buying? What is my incentive to buy it on chain versus on an exchange? So that I'm not convinced that. I mean, I would love to see it just because as a trader, it makes my life a lot easier algorithmically. So, but I'm not, I think real estate is the natural place for this to start.
Yeah.
That's my opinion. I think real estate is the natural place where tokenization should start. But again, you're still dealing with a very illiquid asset class. So, I just think there's a lot of mechanics behind it that really need to be worked out and tested. Because ultimately, I'm trying to figure out what is the ultimate problem that you're trying to solve, and will RWAs, will tokenization actually solve that problem? I think it'll solve some problems.
Yeah, David?
Yeah, the problem that it's trying to solve would be access, in my opinion. So it's a very good way to increase access. And if you want to keep your assets propped up, if you want to get more people involved, so that way those asset prices can continue to rise and look good on paper, then increasing access is great. It's a great way to do that. For example, if you have these countries in the world where people only make $1 a year or so, or however much we've been told, and you want them to be able to get involved in real estate in New York, as an example, tokenization is a great way to do that, because at that point you can break it down into, going by Ethereum, 10 to the negative 18th, 10 to the 18th, essentially, because if you go to the smallest unit, so you have that many different units of this property that can be bought. Now, no one that's earning that little can pay for a $1 million property, but if you take 1 million and then take that to 10 to the negative 18th on that, yeah, they can afford that. They can afford pennies to go towards a piece of that property and potentially rise on that. That becomes affordable. That becomes affordable to anyone. So, you have like a 5-year-old deciding between ice cream or his parents either tell him that he can get the ice cream, or they take the money that he was going to spend on that and throw it towards this for his future. That's an open case now. Access would be increased. Now, everything with you have a lot of people that look at blockchain and think, oh, it's like a magic ledger. You can't do any crime on it. It's not the case. You're going to have a lot of places where fraud are going to be involved. So you have to do this through reputable companies where that they take legal processes, because this is just like you having a neighbor come over and say, hey, I'm selling my property to you. Sign these papers and you're good. Okay, it could just be a napkin that he wrote, I owe you one house on. So that paper won't hold up. If you buy a token now, you're essentially buying the same thing as that napkin. Now, whether that napkin comes from your next door neighbor who has no legal backing, no legal basis for this, or a lawyer, which again, piece of paper, lots of words on it, and in this case, there is some legal backing there. That's a very big difference. So if you have to know that there's a good legal backing behind what you're buying, because nothing that we do, very little of what we do is tangible. If you go over to the store, you buy a carrot. Yeah, you have the carrot, they have the money, transaction concluded. They're not taking that back. But if you go and buy a house, again, the napkin example, maybe you're buying a house, maybe you're not. You don't know until you can see that recorded in place on in hard ink, via the government. Yes, it's yours, as opposed to that napkin where your neighbor just said it's yours and they sold you their house supposedly, but you never see that actualized. It's like how everyone says, I've got a bridge to sell you. Yeah, that doesn't quite work, does it? You can tokenize it all you want, but you're not going to be buying that bridge. Now, if if you do have a reputable company, if they do go through legal channels, then now it can become actualized. The vehicle here is not the blockchain, it's the law. So the blockchain is just a ledger. It's how things get recorded. Now, whether that ledger is held by one person or 50 people, that's the difference between blockchain and the ledgers that we use right now. So everyone looking at blockchain for that as a magical ledger where no crime can be committed, they're wrong. If you sign onto the blockchain, now you have 50 notebooks that record that you bought this thing, as opposed to one. And that's the only difference. The legal part still has to be there. And that's why I say reputable companies and all this stuff. So yeah, this is possible. It'll increase access, but there's nothing else that that differs between this and a centralized server other than like, yeah, you've got 49 other records.
The interesting point that I think you just raised there in terms of access, especially when we're talking about real estate, right? We're already dealing with a major affordability crisis everywhere when it comes to homes. If we start tokenizing this and give access, I think it's just going to make the problem worse, because you're going to get so much incentive for companies to start buying up every single type of property that they can get their hands on, tokenize it, and then I think it's just going to create even more of a bubble in so many different assets if we start tokenizing this without having a good plan. And I don't think the governments will allow it, honestly. At this point, affordability is such an issue that, I mean, look, they're already trying to cap, big real estate companies from buying individual properties or things like that, because it's driving up prices like crazy. So there is a lot of regulatory issues that I see coming with RWAs before these things become actually accepted, because there are too many potential issues with it. I mean, I'd love to see it. I mean, it makes sense to put everything on chain, right? Prove ownership within seconds and stuff like that. It makes perfect sense. But I think there's a lot of obstacles to it right now that really need to be cleared up, especially from a regulatory point of view.
Yeah, and I'll bring up an example. There are two different systems that happen with regards to real estate specifically. And in the West, you have the West that opened up their markets to absolutely everyone, So you have now here's a thing, just economics 101. If you double the demand, then the price goes up. So if you double the population that can access this thing, now you're doubling the demand. Congratulations. So the West opening their market up to everyone, they opened it up to 8 billion people around the world. Now, not all of them can afford it, but many can. More than exist in your country alone. More than exist in your country alone. Because if you've got like 4 billion people that can afford that place, well, now you've opened it up to 8 billion people. Let's say that another 1 billion are able to afford it. You've increased the price. Congratulations. Now, the explanations are sometimes necessary, as I found. So there we go. Now with what the East does, what they do, and this may very well have been a defense against China, what the East does is they say that you can only buy property if you're a citizen. Otherwise, like for example, companies, you can only buy the company if you're a citizen. Otherwise, you have to own 49% of it, and citizens own the other 51%. So like they have defenses against this sort of thing already. We don't, but they do, because they created a smarter system against the mass of the world that could have potential to buy this thing.
Yep. Well, we've definitely seen the effects of that across North America. Absolutely. So, I mean, yeah, the tokenization, I think, I think this is a year for it. I think we're going to see a lot more news on it. I don't think that Bitcoin, or I think, just given how the Bitcoin price or cryptocurrency price is affecting the technology development, cycle. If the prices stay low like this, I don't think you're going to hear as much about it. I don't think we're going to see as much progress on it this year as you think, because I think there's going to be less incentive for a lot of the companies, the big companies, like BlackRock and everything, to dive into it if they don't see the demand for it. Mm-hmm. And, I think that's ultimately what it comes down to. It's going to be what they believe the demand is, and can they sell it, and what the regulatory landscape is going to be like.
Mm-hmm.
Agreed. So, I think we can end off, episode 10 today, and then we go forward,
All right. Yeah.
Give me a minute. All right. Okay. So this has been episode 10 of the Crypto and Coffee podcast. So We talked about precious metals. We also talked about how to survive in a bear market. And we did talk a little bit about tokenization. I think we talked about that on like episode 8. Am I right? Episode 8 also.
I don't remember anymore.
Yeah, well, it's that part. Okay, so let's end off here. Thank you guys for watching episode 10 of the Crypto Coffee Podcast. And likewise, stay tuned.
Thank you very much, everyone. We'll see you soon.
No problem.